Ladies and gentlemen, welcome back to the Decod3rs channel for a special episode. It's basically a follow-up of the DeFi Decoded episode that we had last week with D from Sujiko, and we're going to talk about NFT Perpetual contract and the Sujiko platform, of course. But bro, first thing first, thank you so much for coming back and accepting the invitation of digging into it, because we needed more than 1 hour last week.
Likewise, man. Thank you so much for having me on. It's always really fun to talk, and I'm really excited for today.
Bro, it's gonna be a banger episode. I'm so excited right now. Just gonna give the channel. I forget to put the channel on the frame. But yeah, how was the week? Since we met, last week. What have you done? What have you executed? What happened for you?
Yeah, it's been a busy week. Web 2 and Web 3. Web 2 keeping me busy, 9 to 5. But Web 3, we've been working on some program updates, UI updates. We've rolled first set of those out, enabling limit orders, enabling users the ability to cancel orders, and also view historical funding and trade history.
Nice.
Almost the first set of updates that we're rolling out. We're also working on rolling out some additional markets. I can't mention which ones yet, but they should be pretty exciting. And outside of that, we've got another set of program updates rolling out next week. They take our VMM from almost a version 1 to a version 2, and then that's pretty much the bulk of development for us to go ahead with mainnet. So you can imagine that's our kind of highest priority at the moment. Outside of that, a lot of work around our mint. I'm sure we'll discuss it later. But getting everything ready for that. That's almost the last week in a bit of a nutshell. How's your week been?
Just to make sure, do you have a date? Do you have an ETA of rolling on mainnet and running up the mint?
Oh, good question. So mint is a rough date towards the end of August, early September. And in terms of mainnet, fixed date, I won't mention it just yet in public, but it's in August.
Oh, yeah, true. Okay, so it's coming soon. Okay, nice.
Very soon.
Okay, so the goal will be to explain to the people from the Decod3rs community, because I lobbied them. I told them to come here because we need to understand NFT perpetual contract and perpetual contracts like Perps. Really clearly, we need to do that to make sure everyone is on point and understand your project, because it can change the game. I have so many questions. So yeah.
100%, man. It's our job to educate, right?
Yes.
We've got to explain well.
Yes. So we talked about NFT Perp and Sujiko last week with Asset Dash Hash from Divine Dogs during the DeFi Decoded. So yeah, if that's basically going to be the part 1 of our explanation, and I basically asked a new question because I thought I knew the Perp contract. I didn't. So then we went into a rabbit hole that we took a little tangent from Sujiko project itself. So I'm sorry about that. But then we dig into the Perp universe.
Absolutely, man. And that's the way we should do it. We should start at what we know and move towards the right direction, right?
Exactly. And not pretending, oh yeah, I'm an expert in Perp contract. Tell me more, bro.
100%, man. And definitely the aim of this is to clear up any misconceptions we have and get a clear picture.
And I think the first step to do that will be to show Sujiko to everyone, having a quick demo, and defining what the Perp contract is, because I think it's really clear on once you see the chart. It's really clear to understand basically what it is. And basically a derivative product, and a derivative product is the product, but it's not the product per se that you want to trade. It's a derivative that represents the product. So I'm going to switch to the share screen. And basically, okay, so now we can see your screen where you have the Bored Ape Perp. Nice.
Awesome. Yeah, yeah, absolutely, man.
Yes.
So maybe I will start almost with a recap of what a perp is, and
Mhm.
then if you're happy to, I'll walk through a bit of a demo of the platform.
Yes.
Okay, awesome. Let's start with what is a perp. So a perp is short for perpetual future.
Yes.
Let's break that into the two parts. So let's start with the future part. So a future is a type of derivative that is it's an agreement to buy or sell an asset at typically a date in the future. So most commonly you would get dated futures on centralized exchanges, and
Mhm.
this would essentially be a contract that would expire at that date, and it would settle. So it would expire at, of course, the price of that asset at that time. So a good example is BitMEX have I think it's a 3 month or a 4 month contract that expires, every 4 months, so to speak, and you can of course trade that. I'll pause there. So a
Mhm.
dated future allows us to have exposure to an asset class, and a dated future versus a perpetual future. The main differences are that a dated future, of course, has a fixed expiry date.
Mhm.
It typically doesn't have any funding rates, which can lead to premiums. And a perpetual future, on the other hand, is something that doesn't have an expiry date. And it's the natural question is kind of how does it work then?
Mm.
And typically you will see a funding rate mechanism that's the primary mechanism, outside of just kind of ordinary settlement or ordinary expiry. Um, the perp contract itself is, as you mentioned, it's a derivative. It's a
Yes.
synthetic asset.
Yes. Okay.
It's
Synthetic asset. That's cool. Okay. Love it.
Yeah, it's a
Simple.
good term, and
Yes.
it's contained within the platform or the exchange or the venue
Mhm.
that you're using to trade. Um, I'll maybe stop there, go through a bit of a demo, and then we can almost kind
Yes.
of plug some of this
Yes.
together.
Okay. So just to summarize in one sentence, it's like the NFTs that, like, right now on the chart, you see the price of the Bored Ape, which is like the Bored Ape slash Perp. That's the quote that you have. And it's a representation of the price of the Bored Ape in USDC.
Yeah, spot on.
Cool.
Spot on.
Cool. So I can buy $50 of a Bored Ape representation of the price and trade that, get out with, like, basically the liquidity that you have on the platform, on the protocol.
Exactly.
Cool.
Exactly. So,
Okay.
Ooh.
In the
If you
chat,
have it,
yeah,
then
in the chat, just tell me if, like, everything is clear right now, because yeah, we need to know exactly like if everything is cool, because that's what I want to achieve today. So let us know.
yeah,
Say
let us know if
something
you've
on
got any
Twitter.
questions.
Yeah, exactly. Okay, so you are depositing Sol to your wallet. Okay.
Okay,
Great.
yeah. So
Okay.
I'll almost talk us through what we're doing,
Cool.
especially for those that might just be listening in. So we are currently on DevNet. So right now we will airdrop you one Sol. This is a course on DevNet. This is required for you to pay transaction fees and to get set up with account rent. In terms of how you do that, you literally just click
Yes.
on, click here. We then go to create our paper trading account.
Okay.
This
Wait.
is
Can you keep these features on mainnet so you can airdrop me one Sol every time I want to buy it? Thank you. I appreciate that. I appreciate that.
I would love to, man. I would love to. I might get into trouble with the team, but we can maybe arrange it.
Okay. Thank you. And yes, Carlos, it's just like any trading futures on any crypto exchange, or is it different? It's basically decentralized, right? Like you create a new protocol for it, right?
Yes. So
Yeah.
in terms of your user experience, it's just like trading futures on any other crypto
Yeah.
exchange. In terms of its implementation, it's a little bit different, and we'll definitely dive into
Okay.
kind of some of the mechanics a little
Cool.
bit later.
Okay, so you have USDC credit.
Yeah, awesome.
USDC. Yes.
So
Okay.
as we're on DevNet, paper trading will credit you with 1,000 USDC to get started. And now we're at the point which is an equivalent to signing up to, let's say, Binance and funding your account with 1,000 USDC. Now we can, I'll almost just gloss over some of the components we can see on the page. I'll skip over, of course, the links to different pages. Let's just stick to this page. One thing we've already touched on is the market. So in this case, we're looking at the Bored Ape Yacht Club Perp. We have a market selector here, so you can switch and you can see which markets we offer at the moment. We can then see the Oracle price. We'll talk about the difference between the Oracle price and the mark price definitely in this as well. But almost just to gloss over, we've got an Oracle price, a mark price, what you'd expect on a normal exchange, in terms of 24-hour change, volume. We have open interest, and we'll definitely talk about this cap to open interest a little bit later. We have funding rate, and then we can see a little bit more information about this market, the maximum position size, the maximum leverage allowed, the minimum and maximum order size, and then depending on which pool we're looking at, the balance for those pools for that particular market.
Yes. Just like as an indication, so right now Bored Ape on OpenSea is at like 29.79 ETH, which is at like $1,850. It's like 44,000 and 1,926 bucks. So you are okay. The price is $200 cheaper, basically. $100. Okay, no, less than that. So 80. What the fuck am I saying? Yeah, $200. A bit less than $200 cheaper on the Perp price, right?
Yeah.
44. Yeah, 100. Yeah, $100 difference. Cool. Okay, nice. So and yeah, like part of the NFT is locked by protocol or something. That's the tricky part. You right now. So it's a paper trading account, so everything is fake, but it's a representation of like the real use case. You trade the NFT representation of it without holding it. That's the part that is interesting. But yeah, we will come back to that. So yeah, please continue your demo words here.
Yeah, sure. Yeah, we'll definitely talk about the components to the protocol. But yeah, let's jump back into it. So that's almost market information at your top. Below that, we've got a chart, which is I hope is very familiar to most people. Trading via chart. We've then got recent trades to the right, and then to the right of that, we've got an order form. Again, fairly familiar in terms of you can switch direction, what type of order type you'd want to select. You can enter a price, of course, if it's a limit order. You can enter your size in USDC, or if you wanted to, you can switch to contracts. It just allows you to enter directly in notional value, and then of course it gives you information about your entry, slippage, your liquidation price, your collateral required, and that's what we call the order form. Just below that, we've got an account overview, very similar to what you'd see on, say, Binance or BitMEX, where you can see your balance, your free balance, and your used collateral. And you can also set a maximum leverage for the account in total. And then to the left of that, so jumping over to just below the chart, we've got a few pieces, but the main piece is the positions table. Gives you an overview of your open positions. Let's maybe open a $50 USDC position for Bored Ape Yacht Club. We'll talk about the counterparty and all of that, I guess, a little bit later. But in terms of how this reflects in the UI, in terms of user experience, you can then see the market. You can see your size, your notional entry, P&L, liquidation price, funding, and you have the ability to close it directly.
But everything is like really pretty standard, right? Like, the most important thing is really to understand the product that you are trading right now. And basically, you are buying $50 of a representation of the price of a Bored Ape in USDC.
Yes, exactly.
Cool. Okay, get it.
Exactly, and almost back to your point, in terms of the components on screen, it's
Yes,
very
it's really
familiar.
similar to Binance UI per se because it's the same tool. Like again, it's like really it's the same. It's the same stuff than trading anything else. It's just one more product. But like the component of the product are tricky. But it's cool. Bro, it's fascinating because like everyone can trade Perp, and they don't even need that BAYC is a representation of an NFT. It's better if you have the knowledge of that NFTs. But if you read chart and you're just doing like technical analysis, you read the chart, you take the position, and you're trading NFTs without knowing it's a freaking NFTs.
Exactly right. It enables a lot of different use cases. I think the primary one being, being able to short, to speculate on the downside of NFTs, which right now is pretty hard. And outside of that, being able to hedge your portfolio is a big win. And then of course, in terms of speculation, being able to hop in and out of an asset or exposure to that asset. And I guess also, we'll touch on it as well, but being able to trade small amounts, try to avoid the term fractional, but fractional amounts is a big win, especially for smaller traders.
Yeah, exactly. And okay, I can see you have a leverage, and you can max leverage to 2x, which is cool.
Exactly right. So you can update your leverage. Now, it's worth me mentioning, when we were looking at the information, the extra information about this market, it said the maximum leverage is 1x. So it's worth me mentioning, for some markets, your maximum leverage is hard capped. And for a good example is Bored Ape Yacht Club, hard capped at 1x, regardless of what you set for your overall account leverage. When you go to open up a position for Bored Ape Yacht Club Perp, it will be capped at 1x. And the main reasoning for this is similar to low cap tokens and their associated perps on, let's say, Binance. We have strict initial margin requirements and maintenance margin requirements, and all that really means, or all that reflects in the user experiences, leverage is a lot lower than some of the other markets we have.
I mean, it's good to protect your user. We don't need like a 500 leverage on Perp, at least not tomorrow.
Exactly.
I know that when leverage trading, you can kind of get screwed if the price go up on a short. If example, if $50 the minimum, you can lose. Oh, I think it just answered that. Yes. Okay. So yeah, basically, if you get leverage and then like you get liquidated, you fucked.
Well, I guess to King Khan's point, the maximum that you can lose is the amount of collateral that you post. So let's say you had a $50 position and it's 1x leverage. Of course, you've posted $50 collateral. That's the maximum you can lose if you were to go short and the price were to double. If you were to be long and you were 1x leverage, technically you have very low risk of liquidation.
Because of course, leverage it's like spot, right?
It's very similar to spot. Now, let's say we went 10x leverage instead, and we posted $5 of collateral for our $50 notional position. The maximum we can lose in this case is $5 of collateral, and this is where, or related to this, is the execution of liquidations. So you have to have timely execution, otherwise, the protocol can end up with bad debt. But we can dive into that a little bit later, right?
Yeah, because so if you don't lose more than what you own, like what you put on the table, that's you get screwed on the volatility. If the volatility is too high, then it's gonna close your position like practically instantaneously. But in like a TradeFi broker, you can lose more than what you put on the table, right?
Oh, that's a brilliant point. That's a brilliant point. And this is one of the biggest difference between crypto exchanges in general, including centralized exchanges, and TradFi, which is a crypto exchange has to manage pretty much every step of the trade, including margin settlement, clearing, everything that you can think of. Now that also means you, as an exchange, you're responsible for managing that position as soon as
Yes.
it's about to go south. And you have to. This is why typically you'd see on centralized exchanges that you end up getting liquidated at a price that's a little bit more unfavorable to you as a trader compared to the exchange. And the reason is that the reason why there's a difference in this kind of price difference is because the exchange wants to liquidate you at a
Okay.
price that's favorable for them,
Mhm.
not necessarily favorable for you. And it typically reflects based on the amount of liquidity on a market. So if your liquidity is low on the market, you want to liquidate them as early as possible.
Okay.
And if liquidity is, let's call it thick
Yeah.
on the market, you can liquidate them not late, but you can liquidate them at a later stage comparatively.
And which bring more volume because people can breathe and get bigger position, etc. Yeah, makes sense.
Exactly.
Makes sense. Okay, sorry, I cut you in your demo again. Sorry, bro.
No, there is, man. We've almost touched
Okay.
on all of the core components in terms of what the user can see. Outside of opening a position, we can of course close the position.
Yeah.
Depending on how much the underlyings moved, will then end up with some unrealized P&L, which we can then settle.
Okay, so that's cool. That's what I wanted to show to the people. Basically, the product is like you can trade it with the same tools that everyone knows about it and really familiar with it. If you have traded any crypto in the past. Okay, so I think we can come back to the screen. That's cool. Okay, so yeah, Mr. Rob, like we had a little talk about the DeFi Decoded show last week. So yeah, we have some question about liquidity. Did you feel there is going to be an issue driving new liquidity into this type of market? Where is it niched down? What?
Good question.
Mm.
No, totally understand. It's hard to build liquidity in a bear market, and there is definitely limited liquidity on Solana. There's almost a finite pool of liquidity we're working with.
Mm-hmm.
One of the reasons why we're exploring enabling markets for collections that exist on different chains is to try and attract and drive some of this liquidity into these markets. Outside of that, I think we need, we're working on primitives, Sujiko being one, that are building on kind of new use cases, and the user experience needs to be, of course, smooth, and you don't want to put users off. And outside of that, being able to bridge easily is, I think, a way to also drive liquidity. But almost back to Mr. Rowe's question, it's not going to be a straightforward and easy process to drive liquidity into these markets, but I think there is definitely some demand for these financial instruments, and engaging with market makers. And we talk about how we build liquidity is a whole kind of area of research and kind of effort for us.
And how much do you need to launch a new perp contract for on a collection? Because you need liquidity, and we were talking about USDC value liquidity, right? Is that like a 500,000, 1 million? How much do you need?
Okay, so this is also a good question. In purely theoretical terms, you could set up a brand new market and seed it with virtual liquidity for zero cost.
What?
Yeah, I know it's a quirk to VAMs. Now, there's a whole bunch of kind of considerations that come with that. The first being the amount of virtual liquidity that you seed will dictate how much volume that's required to move the mark price of that VAM.
Yes.
And unless you have enough traders on your platform in the first place, that may not happen, and you may end up with considerable divergence between your perp and the underlying spot asset. So it is almost a PvP game. It's a player versus player game.
Yeah.
You're trying to get traders into the system, and you're trying to get them to trade against each other in order to compete for. If we want to reduce it simplistically, just to compete for P&L, right?
Yeah.
So it's definitely it's a bit of a quirk to VAMs to understand that you can technically seed it without liquidity. Now, outside of that, in terms of limitations to what markets we can list, it's very much dictated by how much spot liquidity is available for that collection as well. So of course, listing a collection that's got very fragmented or very, very little liquidity on spot isn't something we would be able to support due to some of the risks that are inherited by that. But it's a very similar approach to centralized exchanges. They try not to list low market cap tokens if they can, until there's sufficient liquidity across the board.
Yeah, I think on FTX, like you had like Bitcoin Perps, Sol Perp, ETH Perps, shit like that, right? Like that was the big ones.
Yeah, exactly.
Yeah.
And they're the dominant perps across the industry.
Yeah, that makes sense. And Carlos, okay, so it's tricky for me to understand how is it working in the backend. If I'm buying Sol against USDC, I get the exact same amount of Sol, but how can I get 50 USDC amount of the Bored Ape NFT? You don't get a part of the NFT. You get, okay, so let's say you want to buy this Apple Watch because, like there's a PFP, Decod PFP on it, but instead of buying the watch that is worth like $300, I'm gonna give you this stuff that represents the watch, but you can buy this like whatever tissue is for $50, and we can split, and we can say that it's the representation of that watch. Is that more clear?
I guess also
maybe IOU, basically. You're basically buying an IOU of a part. Yeah, you get exposed to the value of that Apple Watch, but you're not buying the Apple Watch.
And Apple Watch is maybe a good example. In theory, if you could create a price index for Apple Watches and get that on chain, you could maybe enable a perp market for it.
Yes. Oh, yeah. Yeah.
So it's that concept of there is a spot asset. We can create a derivative market for it. We can link the two together through an oracle or an index price, and maybe more to the question, which is what's the difference, I guess, between the Sol collections and the ETH collections. The oracle price that we see is the index of that collection. In, let's say, for Bored Ape Yacht Club, it's Ethereum. The base token is in Ethereum, of course. We've then converted that into USDC, of course, through an ETH USDC market value, and that is the price index that we're seeing. And you might ask, kind of why even go down that approach when most Sol NFTs are, of course, quoted in Sol. It allows us, with this approach, it allows us to enable exposure to different network collections, so ETH, Solana, Bitcoin, but also it simplifies a lot of the logic required for margin settlement, liquidations, etc. So I hope that answers Carlos's question.
And like King, you basically bet on if the floor will go up or down. You don't actually own the Bored Ape. It's not even that. It's not you, because you can always like long and short, like even on like NFTFi or the product. But it's like you buying or you selling or you betting, whatever the position you have, the exposure, the exposition to that asset, right? That's the goal of the perp. You're buying an exposure to gas, oil, Bitcoin, whatever, but you never own the asset. Basically, for the Bored Ape, you get exposure to the price action of the Bored Ape, But if you want ape coin, you're never going to get that with the perp because it's a virtual synthetic product. Cool. Yeah, okay, so that point is it's cool. I'm gonna make a short about that, bro. Like I'm gonna make so many short out of this stream. It's gonna be so nice. Okay, so
I'm excited.
King, I think is that clear now? Can I long sol right now? Then I mean, yeah, you can do it, but you don't need perp even to long sol. Like it's two different action. Like
Yeah, I guess
yes.
maybe if we dive into that. So
Okay.
you can go long on Sol by just swapping USDC to Sol on
Yeah.
Jupiter, and that's the equivalent of a 1x leverage position, and with of course no liquidation. You could also go long on, let's say, Drift or Mango markets. You could deposit let's just say $100 for this example. You could deposit $100 USDC and you could go long on Sol. Now the difference between trading on, let's say, or swapping on Jupiter and trading on Drift or Mango markets is on Drift or Mango, you don't hold the underlying, so you wouldn't be holding any Solana in your wallet, or at least not for that position. And you would also be able to trade with leverage, so you could get exposure to more notional size than the collateral that you have. So let's say you had $100 worth of collateral in terms of USDC, and you went 10x long on Sol, you could get up to $1,000 worth of exposure. So they're the main differences between going long in terms of spot and going long in terms of perps. They come with a host of different kind of risks and considerations. But yeah, that's almost it in a nutshell.
Okay, wait. Can you come back on like the long on the perp and the long on the Sol? It should be the same thing, right? What's the difference?
So the main difference is that if we're going long on the Sol token and we're holding that token, we have it's implied in this example, but we have got the infrastructure to support storing Solana. So there's self-custody involved. There is in the case of holding the Solana, there's a lot of risks that don't apply to this compared to holding the perp positions. So some of those are liquidation risk, exchange risk, exchange solvency.
Yes, exactly. If you disappear, I don't have the perp anymore. Like your perp contract doesn't
exactly right.
Shit, right?
FTX is a good example.
Right.
Yeah. FTX is a great example. And there are also risks that come with in the event there is a malicious attack. So you might have socialized loss mechanisms. You might have auto deleveraging mechanisms. They all introduce their own inherent risks. Now, but maybe we'll just expand on that. So let's say we wanted to hold some exposure to Bitcoin as well. We would need to set up a wallet for Bitcoin. We would need to go and purchase that Bitcoin and send it to that wallet. So there's a few steps involved to get exposure to it. But again, it's a very similar process. The difference with perps is typically I can get that exposure from one platform. I don't need to go and set up a new wallet. And also, it's all from a single venue. So it's quite straightforward in terms of a user experience. But yeah, they're almost the main kind of differences between the two.
So why you don't have a Web2 infrastructure that offer like all of the transaction can go in the blockchain in the backend, but like the whole so you get like DeFi aspect of it, like no QIC and shit like that. But like if you want to go cross-chain, you can even build like a Web2 platform, right?
Yeah, absolutely. So this is why we do see centralized centralized exchange perps for a whole host of assets, not just crypto. You're now seeing perps for stocks and for oil and all sorts of different kind of commodities and asset classes.
Yeah.
So this framework or this approach to implementing perps is something taken from the centralized exchange realm, but almost implemented with DeFi Lego blocks.
Okay. Yeah. Okay, makes sense. Okay, so you stay in crypto to avoid legal dogs nightmare. That's cool. That's smart. I love it. I guess second question from Rob is to the liquidity question. What premium/incentives are market maker, liquidity provider, potential receive other than funding fees? So the funding fees is like basically the premium that you pay when you when you buy the contract, like the PEP, and that's basically the difference like that you're going to pay for people like the writers of the contract, right?
So it's I guess the best way to view funding payments is a premium that's charged to the particular side. So that could be the longs or the shorts, depending on the premium between the mark price and the oracle price. And that might be a complex way of me saying that. It's a mechanism to try and incentivize those that have positions to either close in the direction that would reduce the premium, or to open positions again in the direction that would reduce the premium. The premium being the difference between the index, so the actual underlying asset, and that perp market.
That's the spread, right? That kind of a spread that we have on spot market between the buy, the bids, and the ask.
So that's a different type of that's I guess what you are alluding to is the midpoint price.
Yes.
Which is 8 that's the index price, or it could be a composite of the index price.
But like the fees is like kind of like okay, so it's not a spread, but like it's the difference. Like it's basically your margin, right? Like between what we saw of the real price of the Bored Ape and the price that you display on your platform. Like your own fees is basically yes, exactly. That's the spread that the book keep, right? That's for you, right?
So funding payments is more like a premium charged to traders, or rebated to traders. The spread, I guess, that we were mentioning in terms of the midpoint between bid and ask would be that's specific to a venue. So let's say on Sujiko, the VAM posts bids and asks, and the difference between those would be the spread. Similarly, on a centralized exchange, the spread is just the almost the percentage difference between bid and ask.
Yes. Okay. Is like your fees displayed in your interface?
That's a good question. Right now, no. That's something we've got on the roadmap. So when in our next UI updates in the order form, you'll be able to view the fee based on market conditions and the position size that you're opening.
Yeah, and then you can say, oh yeah, no hidden fees, because hidden fees are bad. So you can market that.
Exactly right. And if you're not happy with the fees, you could open a limit order instead, and that would cost you a little bit less.
That's up. And you can hold the NFTs, and then you don't pay the fees anymore at all, right? Is that how that works?
So the only fee that you would pay if you had a position is the funding payment fee.
Yes.
So every hour there's a fee charged if you're holding a position, and it depends on the difference between mark and index. It's asymmetric. So if the funding rate pool doesn't have enough funds to cover the payment, it's marked down to 0. Otherwise, you'd be able to, you're obviously paying into the pool, so there's no block on that. That's probably the only thing outside of that to almost mention as a guardrail.
Okay, I'm not sure I understand the sentence, but that's cool. Okay, so that's the print. Yes, that the book gives. Any limit of position 1 to NFT, or can I do what you want? You can do what you want. That's the beauty. Like, you're not getting NFTs when you're buying a perp. Like that have to be clear. Like you're buying an exposure to an NFT price action. I don't think I can simplify more than that.
I guess to add to that, there is no limit to the amount of traders in the platform, but there is a position limit.
Okay. And billions.
It depends on the market, right? So for Bored Ape Yacht Club, it's 2.5 contracts, which I think is the equivalent of about $150,000. So typically position limits are kind of quite high for retail traders. But that's
I can
not to
create
say
multiple wallets.
totally, which is why mainnet is going to be gated to begin with.
Okay, so you whitelist the wallets that can open. Yeah,
access the platform.
Okay, makes sense. Okay, how do you? Okay, so you launch, you no more whitelist anymore. So then that means you need to reach a volume to guarantee. Bro, okay, so if you don't have liquidity, this is like the recipe of like a fucking nightmare for you, bro.
Totally right. If there isn't product market fit, if there isn't demand for these derivatives, it can be tricky to manage. But I would like to think, especially based on what we saw with NFT Perp on Ethereum, there is some demand for NFT Perps, especially for ETH and I think definitely for Bitcoin ordinals.
Bro, it's already like 42 minutes and we haven't just done the introduction. That you need to come back. Okay, this fucking topic is fascinating to me. I love it so much. It's so cool. There is so many layers that like problematic that you will need to solve to not just explode completely the Solana blockchain.
Exactly
it's
right.
So cool.
It's a complex problem. It's a complex problem, but I think
okay.
if we can move first, we could build something really cool.
100%. Man, if you're successful, you will be the biggest market mover on Solana and even crushing tomorrow. That's for sure. Okay, question. Why don't we have Perp yet?
Good question. It's something that I have been looking at for about a year now. I back in November spent quite a bit of time understanding the pain points experienced by teams that had tried to explore this financial instrument, the likes of Drift, Mango, also Switchboard in terms of oracles. We also saw some of these primitives being built out on ETH, so almost gave us a bit of a framework to how we should approach solving this problem. But almost to jump into it, some of the main reasons we don't have perps yet are NFTs are a difficult asset class to build perps for. The main reason is we're talking about a low float asset class, so there's typically 10K max to a pretty liquid collection. It's an equivalent of a low float token perp. So there are a lot of you're dealing with a different set of assets, and that comes with a whole different risk management framework, and that comes with a whole host of problems when it comes to bootstrapping liquidity. So almost to put it in a nutshell, the three kind of major pain points that we learned from different teams were starting off with bootstrapping liquidity is pretty difficult on these perpetual markets, especially for these niche markets where it's for a specific collection. The second was there were, especially at the time, no robust price feeds available on chain for NFT collections. And thirdly was a risk management framework hadn't been designed that was sophisticated enough and swift enough in execution to avoid a protocol entering an unstable state, whether that's through timely liquidations, regulating volume through open interest or order sizes, introducing settlement limits, market isolation, ADL, the whole host of it. They're the main kind of three reasons why I would say there's been a lot of friction around getting this together, and we are seeing some of the Lego blocks that are required to put this together being proven in the wild for the first time. So Drift's V2's success, I think, is a testament to their design. And that's something that, we've taken a lot of consideration with and have adopted it within our protocol. So I would say that they're the main reasons. And to almost kind of summarize it, I would say that the tech wasn't mature enough up until recently. And now we're starting to see some of the primitives, some of the tech getting to a point where it can be glued together to enable a user experience like NFT Perps.
So now you have the tool, so you can start playing with it. That's cool. Congrats. That's nice. Good timing. Good marketing. Oh, timing to market. Time to market. Yes, good time to market. It's a bear market, but yeah, whatever. You can't have all of the cards on you in your hands. It would be too good to be true.
Exactly right.
Okay, so for example, so if the liquidity is a problem, like you go raise money, you get 1 million. 1 million. Let's go with 1 million. Yep. Do you have enough liquidity to start to list Bored Ape, Mutant, Decod3rs, and like the top 5 project on Solana?
Yeah, I think there's maybe 2 pieces to this. We can list markets that represent the more or most liquid collections, if regardless of how much initial capital we raised.
Mm-hmm.
The second part to that is typically VAMs don't allow external liquidity providers, and that's something we are working on to enable. And you might have seen it with Drift's recent rollout of their liquidity program. So a very similar mechanism where you'll be able to stake your USDC. You become a component of the VAM, and you provide liquidity, and you earn fees from it. They are that is almost the most fundamental approach to being able to enable external liquidity. But almost going back to your question, we would definitely be able to list 2 to 3 markets. But I think going outside of kind of 3 is something we would need to put through our risk framework and understand if it's sensible.
Okay, so with 1 million, you would be able to list 2 to 3 collection, like Bored Ape, Mutant, and Decod3rs, basically.
Yeah, exactly. And
and so high liquidity, like biggest. Okay, cool.
Yeah, and then the almost the next steps for listing more markets would be the amount of external liquidity we can attract into the platform.
Okay, makes sense. Yeah, and on ETH that you have bigger wallets, so if you initiate that, then it makes sense. That's cool. And so Solana people can be exposed to price action of top ETH collection, which is cool because it's a good proof of concept. That's cool. I like it. Okay.
Exactly right.
That's cool. Okay, so in TradFi right now, like, what's the regulation that say, okay, you can't, not like my mother can't open a perp product of oil? How does that work?
Okay, so in the traditional world, the traditional finance world, in most Western countries, if not in most countries, you need to be an accredited investor, who is qualified and understands the instruments that they're trading.
Cool.
This typically eliminates most people like you and I from trading perps, which is it can be viewed as a pro and a con. Most governments view it as a bit of a casino, with little to no regulation in terms of preventing market manipulation. Whereas, that's almost totally right. But I guess almost to expand on that, there are, especially with relation to derivatives, that you can go down two approaches. One is you don't register in the US. You go offshore, and you hope that the US don't care about you. The second, and which is definitely the most sensible option, is you get registered in a jurisdiction. You get your derivatives licensed, and depending on if you can, offer to the jurisdictions that you're allowed to. The CTFC in particular in the US really don't like derivatives being offered to US citizens, and we're seeing that stance being adopted by the US, most of the EU, some parts of Asia and Africa, and that applies, or the most vocal elements of that have been for centralized exchanges, but this is where I think that there's a potential use case for decentralized exchanges, to be able to capture that market share. Of course, GUIs need to adhere to legislation and the restrictions you need to put in place, but implementing that on a program level is pretty hard from what I understand.
Okay.
So decentralized exchanges stand the strongest chance to, I think, to capture that market share that's leaving.
Okay, so now that we don't have any regulation and like anyone can create a perp contract, okay, so you have to bring trust for people to buy your product, because if that's not the case, that there's nothing to trade. Like you can have 2 billion liquidity, like if no one is using your product because no one's trusting you, like bye-bye. But it's crypto, right? So people are like legends. So it's a case. Okay, so how do you like what's the limit of like the set up a paired contract on anything, and even the market manipulation? Okay. I'm gonna rephrase that. Sorry, I'm thinking while I'm doing the question at the same time because it's going everywhere. Okay, so first, market manipulation. Like if you have enough liquidity in the collection, and because you set the price on the marketplace when I can list like 50 Bored Ape for 5 if I will crash the price all by myself, right? So then your oracle is like catching that up. But during the delay, I can even trade or like even short the position on the perp and crash the market myself because I have enough Bored Ape to do that. How do you avoid that kind of scenario, which is basically a flash crash, but I made a shit ton of money on your perp contract?
Okay, so this is a very good scenario to discuss. This idea of, let's call it whale concentration, is not new to NFTs. It applies to pretty much any asset class that we can think of. It's something that if you're designing a decentralized exchange or even a centralized exchange, it needs to be worked into your design in terms of how you mitigate and or prevent that. So fancy way of me saying that if you're building a decentralized exchange, you could take a very basic approach and just use, for example, the raw floor price of a collection.
Yes.
Now, we've done quite a bit of research around what is the most sensible metric to use for a price index of an NFT collection. Now, a raw floor price, so just the plain floor price, requires just one actor to manipulate, and they also don't need to actually execute any trades. And as you can imagine, on Solana, this would be pretty cheap if all you're taking into account is the listings, and it's dirt cheap. I can manufacture not only manipulation but also wash trading, right? So this is where that would be if you took a basic approach, and almost one iteration on that is taking a bit more of a smarter approach where you take into account not only the underlying assets bids and asks, but we also take into account the recent sales, as that reflects a little bit more closer to the true value of this asset. It's a similar process to what we might see on some centralized exchanges, but of course, there are quite a bit of differences given it's NFTs we're looking at. At a high level, three-step process. We're taking on-chain data. That's bids, listings, and recent sales. We're then filtering those. So we're trying to filter out wash trading, as well as we're also implementing time decay. So depending on how long ago this particular action was, there's a weighting to that, and then we end up computing a statistic. And the closest representation to this statistic I could describe is maybe like a median that has all of the outliers filtered. That's our initial approach to get us off the ground. It's still not the only approach.
But if you have a delay, you can like arbitrage that position of floor price, right?
Totally right. And this also applies to centralized exchanges, which is if there's a delay in the Oracle price or in your market maker moving their quotes, this can lead to someone who's a little bit more informed coming in, picking off that liquidity and making a profit. That concept is almost toxic order flow. It's a term kind of thrown around for this order flow of this asymmetry in information, where someone's more informed and they're picking off someone who's less informed. I guess to almost jump back to this approach of a smart price algorithm, it also allows us to expand out to other networks. So this approach of taking on-chain data, filtering it, computing an index can be expanded out to Bitcoin and ETH collections. And another piece, which is more of an area of research, is there is an ability for the VAM. So the VAM is what's providing liquidity in the initial stages. Yes. There's an ability for the VAM to adjust its spreads. So it is a market maker, and it provides, we mentioned a little bit earlier, a spread between bids and asks. That will adjust depending on the Oracle price. So what this means is, as long as the Oracle price is up to date, the VAM will adjust its quotes to put itself in a more favorable position than otherwise.
Okay.
So trying to mitigate this idea of toxic order flow.
Okay. And so if you had to attack Sujiko order book, yeah, I guess you have an order book, right?
Yeah, absolutely. Yeah, okay. So it's a virtual order book, but
yes,
yeah, we could say it's order book flow.
So what would you do to attack your own application?
Oh, that's a tricky question, man. So this is always something that we've tried to design into the protocol, which is, regardless of how you try to attack the protocol, we would be able to. We're trying to mitigate any of that impact. It's an easy way of me saying that. So I guess some of the mitigations that we've got in place are, just-in-time auction mechanism. So this idea of a informed trader trying to pick off a less informed trader.
Yeah, okay.
An auction mechanism tries to implement a small delay in this kind of opportunity period, and you can, in some cases, mitigate that trader taking that action.
Yeah, okay.
It's a bit of a hard concept to wrap heads around, but well, I hope that makes a bit of sense.
I mean, yeah, like it. Did I understand what did you just say? I'm just trying to make sure.
Yeah, totally.
I'm not sure, but yeah, whatever. Okay, Mr. Rob, almost like a movement with standard deviation and correlate to volume and price. But even like the volume and price, like, again, I can be aware and I can list one like really high, watch trade this stuff, and then all of those parameters are yeah, it's a false positive, right? Like, because you can create a wallet by my instant like super high expensive Bored Ape, which should be a floor, but this one sold for like a record sale, and another one low, or like two sales super high, and you don't really have any. It's hard for you to detect that it's wash trading. But I fucked up the oracle. Like yeah. Could be bro. I don't want to be in a position. I'm just a content creator. I'm so happy. I'm just doing a YouTube channel, but I don't want to be in your position. You choose a mission that something.
Yeah, it's
It's
you know,
a good
there's a lot of
challenge.
potential, right?
Yeah, no, 100%. It's a good challenge to have. But yeah, I prefer my side of the podcast. But that's fascinating. That's math, basically. That's good math. You have to do the math, start mathing.
You got to do quick math, right?
That's cool. Yeah, almost like at the moment. Rob, like, did we answer all of your interrogation correctly? What's your feeling right now, Rob, about the liquidity issue that could be the main issue, basically, for your platform? That's right to say that, right? Like, the liquidity is the main problem that you need to fix, right?
Yeah. Well, once you've got a robust venue, it's you know, your next and biggest problem is bringing liquidity to the platform.
Yeah. Okay. That's fascinating. This is a fascinating topic. It's cool.
It's a rabbit hole, man.
Yeah. And if you fucked up like a little bit, that can have like massive consequences. No pressure, right? But that's yeah.
Yeah, you're spot on, man. I not to name any names, but we recently saw a protocol that just under the basis of broad logic ended up going or ended up having to shut down. So you're absolutely right. Every single line of code can have a critical impact.
Oh, okay. I'm gonna need to name them. Is that Curve?
No.
Okay.
But also
so on Solana then?
No, not on Solana.
Oh, okay, fair enough. So I don't have more names then. But yeah, bro, like the Curve issues, this is fucking massive, man. Like
it's crazy,
Curve
right?
on it, what the fuck?
You wouldn't have expected Curve to get hacked by. I think, you know, the actual concern is the whole loan around the founder and him repaying it back. Yeah, I guess going a little bit off topic, but crazy to see OTC deals.
Right, that's the issue. So yeah, the issue is liquidity. It might be good to wrap into ETF style bundles to try to draw in some liquidity from Web 2. Yeah, I can feel the pressure right now from Carlos. Yeah, so yeah, no pressure. It's not on you, Carlos. I mean, it's all on Z.
It's all on me, man. It's fun. It's fun.
Enjoy sleeping by night. I hope you don't have any problem. I'm joking. I'm just but it's fascinating because like your product could be like, if successful, it's massive. It's a huge advancement in like Solana DeFi ecosystem, and tomorrow, like more than that, it's bullish on you, bro. If you can pull that up, and if you're the KPIs and like you have the liquidity to it, you're gonna be the most successful dude of the ecosystem for sure. That's no question asked, for sure. You have to pull that up.
Man. Yeah, you have to pull this off, right? And it's a big challenge, but you know, we got the support where we need it. So yeah, very excited to
cool.
for the next month or two.
That's cool. And okay, so like a logistic question about like those DeFi tools that we are bringing to it from TradeFi, because like Perp contract are like since forever in TradeFi, obviously. Like, how do we onboard more people that's just going to land into crypto land and they're going to install Phantom for the first time like on Monday, and they will need to learn about like NFT Perp contract on Wednesday? Like, how do we do that?
Oh man, that's a good question. there is maybe 2 or 3 components to this. So first is really simple and familiar user experiences. So reducing that friction for a user to get into your platform and to get using it. A great example is Drip with their weekly airdrops, and it's a beautiful example of the crypto experience almost being masked. It's not right in your face, and it's got a lot of Web 2 feel to it. Another one is Drift and Mango. It feels very familiar to using a centralized exchange. They're it's something that we have to work towards with a lot of baby steps. So improving the user experience is a big piece. The second piece is the whole wallet situation. I think if for most people who are listening, who have maybe got a few wallets and they are pretty active in the ecosystem, they know that some wallets are pretty heavy and clunky, and it can put you off, right? When you open up your banking app, you don't, unless you've got pretty shit internet, you don't expect it to take a minute to load. You don't expect it to freeze. You don't expect to have to, open it 2-3 times before you see an updated balance. That experience, I think, is something that needs to be ironed out. I think a few teams are pushing forward with that. Ultimate on mobile has a really nice user experience, and Glow. That's like a key component to the user experience, right? They're like the initial things that come to mind, and then a lot of use cases that you don't feel like you're using crypto. A good one is maybe Solana Pay. I know that you are using USDC, but that feel and touch is very much Apple Pay like, and those kind of use cases are what would bring more people into the ecosystem. And then there's kind of a whole separate kind of funnel on how you convert those users into users of, let's say, Sujiko.
No, that's interesting. Yeah, it's basically, again, it's all coming back to doing crypto and a Web3 shit without connecting your wallet and have a nice expand. It's completely transparent. It's like using your bank account via your iPhone, and you just tap and then you have paid. You don't need to care about like what's happened into behind the scene. But you need to understand and get financially educated to understand Perp contract futures.
Exactly.
And this video is part of it.
Hell yeah.
Yeah.
And part 1.
Exactly. All of this content will be shared between generations of like future traders.
Absolutely. We're educating the next generation.
Yes, and the next. But bro, like like what you're building is like touching like so many layers of the industry. It's so cool. I love it. But I will continue to observe Sujiko and try like see the progress that you all do, and it's exciting. I'm gonna sweep the floor.
I appreciate it.
I can do that.
Hey, sweep the floor.
Yeah. Oh, okay. So other question, and gonna slowly wrap it up after. Can we have Perp indexes?
Yes. So, if you guys remember FTX when it was around, you could actually trade, what was it? Shit perp and mid perp. So shit perp was like the shit coin index. Mid perp was the mid like float token index. You also had like a DeFi perp, which was like a DeFi basket index.
Okay.
That was FTX, which is of course not around anymore. I think BitMEX offer some similar products, or at least they did around the same time, and Binance also did. So it's definitely possible. The only, not the only, but an additional complexity to kind of a composite index is it can be a little bit complex to reconstruct that price index as a trader, and to understand the constituent components. So if the perp trades if the perp moves in price, this index perp, to be able to calculate which assets you need to use to offset that as a hedger can be a little bit more tricky than if you're just trading Bitcoin perp and you're hedging directly with Bitcoin. But back to your question, yes, definitely you can have.
What?
Sorry. So let's say the DeFi basket perp was tracking 1/3 curve, 1/3 comp, and 1/3 Aave. Let's say the index perp moves $1. You would need to theoretically hedge that with 1/3 through curve, 1/3 through Aave, and 1/3 through comp on spot index on spot venues, right? It's more for the hedgers and maybe the market makers that it could introduce some complexities, but it's if you have a transparent price feed and price index, it can still be enabled.
Okay, so it's not just an average of all of the Oracle and that's it.
No. Typically, it'll be like a composite, right? So I think normally we see like some of the higher liquidity tokens having like a higher weighting in the index. So let's just assume, for example, Aave had the highest liquidity. You might see like a 0.8 weighting to Aave, like an 80% weighting in the index to it. But absolutely, you can get indexes which are a composite of different tokens.
Okay, so if I want to do like a Vitler, like a Vincent index, and people can buy my portfolio, that's just harder than just tracking Decod3rs assets.
Yeah, totally.
Fuck. Okay, that would have been a nice tweet, bro. Like, do you want to know how he get like 50 Decod3rs? You can track his portfolio value. Let's go.
Let's fucking go.
By the Vincent Perp contract. That's cool. I love it. I love your world, man. I love your world and your work and what you're doing. It's cool. I don't want to do it myself, but thanks for your effort, bro. I appreciate you appreciate it.
I appreciate you too, man. The words mean a lot to me. Thank you so much.
That's cool. Okay, so all of that it's covered, like the limit, etc. I'm just checking. Perp versus fractionalized NFTs. Because a fractionalized NFT, you buy 10% of the asset and you own this 10%. Cool. Perp is a derivative product of the exposure of the index, like what we are talking about since the beginning of this stream. Is there any different use case between fractionalized NFT? Which one is better? Fractionalized NFT makes sense somehow. What difference do you make?
Good question. So let's maybe start with the differences. So fractional NFT trading typically requires the spot asset locked up in the protocol, and it's a form of fractionalized trading. So you are taking a percentage stake. Maybe is not the best term to use, but let's just go there. You take a percentage stake in this asset, and you own this percentage of it. Besides the fact that you might get, or you will get, any of the perks associated with the spot assets, so whether that's airdrops or anything like that, you will still receive those. Of course, how you divide those amongst the fractions is a whole different problem. Besides getting exposure to a smaller amount than the whole unit, there's not a terrible amount of difference between fractional NFT exposure and derivatives. That being said, fractional NFT, the token that represents your shareholdership in that fractional NFT, can sometimes deviate from the expected value. So what that means is, if I had one board at Yacht Club and I own 10% of it, and I wanted to redeem that 10%, sorry, redeem's maybe not the wrong word, is the wrong word, But let's say I wanted to trade that 10%. Let's say the bidder for that 10% may bid at a price that's lower than the index. So lower than 10% of Bored Ape Yacht Club's actual price. That can lead to a large premium, whether it's positive or negative, between what you actually have exposure to and this kind of token that represents shareholdership. So fractional NFT, that's kind of a or almost summarize, you're using spot NFTs that are locked up, and you're gaining exposure through a token which just represents how much percentage you own in it. Derivatives, especially with perpetual futures, are a type of synthetic contracts. They are typically cash or coin settled. So, settled in USDC or maybe in Bitcoin if you're trading on BitMEX. And if you're trading a perpetual future, they have no expiry date. So there's no kind of final date where the contract is auto expired and you're given the cash. It's only when you close the position are you then able to realize P&L. Major difference is you're not holding the spot asset. The spot asset's not actually involved at all in this system. And you can have exposure on the short side to an asset, which is unique to derivatives.
That makes sense. I understand. That's good. Also, Perp contract are better. I'm saying it. Okay, in the chat, I want to know. I'm gonna put the app again in the chat. Like, I want to know if you are ready to try Perp trading on. Like, it's a paper trading, so you're not going to lose any money. But just try it, and I want to know if you are open to try it and to try Sujiko and follow the concept of NFT Perp after this stream, or you just didn't get it and you're not interested. Please let us know.
Yeah, please do.
Yeah, that could be cool. Okay, so I think, bro, I asked you everything, all of the question that I had. It's not impossible that we will have an episode 3. But yeah, see, King is a king for a reason, bro. Yeah. I'm already there to try it. See, that's what's up. That's the power of like talking about shit. Then people try shit.
Legends.
That's cool. Okay, so what would you like to, for the people who watch this video, like to, what's the take back, like the lesson that you wanted for them to remember?
Good question. I hope from the stream you can take away and understand what the hell a perpetual contract is. I hope that you guys are open to trying the platform out. Would love to hear your feedback. It's something that we value quite a lot. And we're at a stage that feedback is digested and actioned. Pretty much from everyone. We like to work quite closely with users of our platform. Outside of that, any positive contribution is a step forward. So support the builders. Test the apps. For if you're building, ship it. Listen to your community. Enter the hackathons. Get into public spaces. And if you're interested in kind of Sujiko moving forward, we are looking to go mainnet in August. We're looking for people to get involved in the Only Possible on Solana hackathon. We're sponsoring a track, so take a look. Feel free to hack some code together, put a submission in. You might win yourself a prize. And we've got a mint coming up in end of August, start of September. We are currently running pre-sales. If you guys want to get in, hop into our Discord and just open a ticket, and we can hook you up. But yeah, that's everything from our side.
It's amazing, bro. Okay, so yeah, I will. Okay, and tomorrow I have the first Decod3rs all the show where I want to let like community members like jump on the channel and talk about it. And Mr. Rob is the first guest, and I want him because he has a financial background, and I want to continue this conversation with him. So I invite you to watch this show too. And maybe jump on the chat because we will have we're basically gonna talk about all of these Perps 2 episodes that we have done together, you and Midzi, and get the feedback of the community about it because it's a fascinating topic. I love it so much, man.
Yeah, absolutely. Would love to listen in and definitely would love to hear the feedback that you guys give.
Cool. I think we need few educational sessions to completely understand the working and would need kicks like Zvin and Rob to discuss about it. Bro, that's exactly what I'm saying with the Decod3rs. Thank you, Carlos, for the message because that I could have said it better. That's exactly what's gonna happen tomorrow about NFT Perps with Mr. Rob. And it's gonna be amazing. It's gonna be cool. Okay, so I have two more questions, and we completely exploded the 1 hour time frame. I hope you're good with that, Z.
All good with me, man.
It's fun when we talk about Sujiko and Perps, right?
Exactly.
Okay, so what the question that you wish people ask you but they never do?
Man, that's a good question. I actually couldn't think.
Oh, did I lost you? Oh, bro, are you here? I think you should stop your mic. The chat, is that just me? Can you hear him? No, I don't think so. See? Are you here, bro? Is that just me or what? In the space, can you hear me correctly? Yeah, it's cool, right? From my side, it's okay. Oh, Z?
Yeah.
Z?
Can you hear me? Hey?
Yes, I think I lost you. Are you here?
Yeah, I'm not sure what happened there. My external mic just stopped working.
Oh.
Sorry about that, man.
That's sad. Okay, so you're back. I think you're back. Nope, we can't hear him. Okay, now you're back now. I can hear you, I think.
All right, awesome. Sorry,
Yes.
where were we, man?
What's the question that you wish people ask you, but they never do?
So yeah, it is a tricky one. It depends where I guess you come from. If you're a builder, how to get started,
Okay.
how to take an idea from 0 to 1. Outside of that, just how you doing is always a good question.
And how did you start your ideas, bro? Because that's the question you answer basically. I make you ask yourself a question.
It takes a lot of planning and perseverance. It depends on what you're working on, but it's a lot of planning.
Yeah, especially on Perps.
Exactly right. A lot of risk management design.
Yeah, that's fascinating. Yeah, I can't imagine the meetings with your team, when you say, okay, so how do we launch that without get fucked first minute? Let's go. Give me ideas, guys.
Exactly. We need brainstorming sessions for that.
That's cool. Yeah, that's fascinating. Okay, last question. Who should be the next guest, and can you please make the introduction, please?
Oh man, that's a good question. I would put forward anyone from the kind of next generation of Solana.
Okay.
I can rattle off a couple names that I could make intros. I can definitely make intros for. In the NFT space, let's that come to mind: Rainfi, Texture, Sharky, Mango, Radium, Tensor.
Okay.
Oracles, Switchboard Pith, and I think some of the newer projects, maybe Solarplex, D-Reader, Bob's Burgers, Cubic with their quantitative, is it quantitative funding, and probably the next generation of derivatives, so Cypher, MarginFi, ourselves, Mango, again. You take your pick. I'll try to make the intro.
Bro, if you make the introduction for all of them, so first we're gonna be the best. We're gonna be best friend forever, and you just like set up my lineup of content for the next 3 years. So thank you for that.
I will. You know what? Let's do it. Let's maybe start to hook some of these up.
Perfect. And you can even co-host some of them. That would be cool. That could be cool to have like a DeFi expert like you as a co-host. Let's go.
We're awesome, man.
Cool. Thank you so much, man. I appreciate that. Yeah. Do you have any last words before we close up? Like, I think like that was the takeaways. But like any action, just try the app.sujiko.trade. But other than that, oh yeah, people can follow you too. When are you going to get back the Sujiko Twitter account?
Oh man, I wish I could get it back yesterday. It's such a pain in the ass. Yeah, there's a strong chance we're just gonna have to start afresh, sack off this 11,000 follower count that we build and start again, right? Yeah, there's a strong chance we're going for that.
Okay.
On the side of recovering our account, we're in contact with 2 people from Twitter team, but the most that we've got back is they're trying to push this ticket up the queue. But yeah, as you can imagine, no action yet.
Yeah,
pain in the ass.
Elon is fucking up. I will DM him.
Oh man,
I will slide a DM for you. Take us back. But yeah, bro, like thank you so much, man. That was a blast. That was an amazing stream. Was really excited to have you back on the channel. Yeah, and again, there is a high chance that we have an episode 3. Maybe after the follow-up with like Mr. Rob and the community, maybe I will have more questions from them for you, and I will slide into your DM, and then we're gonna schedule another stream anytime soon.
Yeah, let's do it, man. I'm more than happy for that.
Thank you so much, man. And I think we can wrap it up from here, right?
Yeah, absolutely, man. Thank you so much for having me on, and look forward to speaking soon.
Thank you so much. Thank you for your time. Everyone in the chat, thank you so much for participating into the stream. We have an Decod3rs in 1 hour and a half. And so, yeah, we will see you there. Thank you so much. I hope you understand what the fuck is a perp contract, because that was the main takeaway of this stream. I hope you get it now. And you're all going to use Sujiko, try it. It's paper trading, so it doesn't cost you anything to trade. Thank you so much on the Twitter space. That was pretty cool. Thank you so much to see you there. And we will see you again next stream in 1 hour. Bye, everyone. Thank you so much.
Thank you, man. Bye.
Peace.